What's up, everyone? It's Karthik with MoneyVest. So Microsoft, Meta beating expectations. Microsoft is higher on the day here, pre-market up over 80 basis points, and Meta, for the most part, is very, very flat. It did sell off a little bit initially, but then, of course, starting to recover back to the upside. The earnings call is going to be starting for both of these companies very, very soon. I was live a little bit earlier today going over Robinhood, going over Twilio, Clack Corporation, Amgen, Starbucks. We had a lot of companies reporting numbers today. So as always, make sure that you drop a like and subscribe to the channel if you're just joining us for the first time. And again, links to our Discord and Patreon is going to be down below if you're interested in joining us. I sent out the alert on SoFi yesterday, picked up over 200 shares at $10 because, we talked about this in our Market Open live stream. And then I mentioned this in the Discord as well, that I think it's a very, very oversold reaction from the market because it does not deserve to sell off after such strong numbers. And lo and behold, it's up over 9.5% on the day today, trading back up to $11.46. So nice little accumulation. A lot of our members in the community, like literally a lot of them, picked up SoFi in the $9 to $10 range yesterday, considering it was selling off very aggressively. So we made a nice little trade from yesterday as well. So if you want to get access to all the trade alerts, find out exactly what we're trading, we're up to almost 1,000 members on our Patreon. So help us get to that goal. Link's going to be down below with that 16% annual discount that expires at the end of this month. So there's a few more spots left. So you can pretty much get that 16% discount, save 2 months for free, and you'll get access to my shopping list. Also, this is a brand new feature that I posted for all the members in the Discord as well. So all in all, the markets were very, very flat. They were actually slightly down. The NASDAQ here selling off over 0.5%. The S&P 500 down 33 basis points. Technology was the big sell-off here on the day on the back of Tesla and even NVIDIA, which was selling off. So if you come over to our market concentration, you'll notice the big three down almost $100 billion, and Max 7 was down $28 billion, of which majority of those losses coming from Apple here. Eli Lilly, of course, was down quite a bit. We had NVIDIA down $47 billion. Advanced Micro Devices with a big sell-off, down over 10% on the day, over $28 billion. Broadcom over $12 billion. Tesla also down over $6.8 billion. And a lot of that money went into, of course, Google. That was the big leader on the day. Amazon also pushing up 1%. AbbVie up over $21 billion. We had Visa, Garmin, MasterCard. They were all pushing higher on the day. So a little bit of a mixed sort of market. But utilities, healthcare, industrial, staple, discretionary, they were all down. And comm services on the back of Google, very green with financials recovering back higher. Materials were up, and real estate also pushing up over 35 basis points as well. So this right here is one of the things that I really wanted to break down once again on the channel. I've talked about this in our previous videos, but I really wanted to spend some time on this because if you come over to the MoneyVest index, right now it's at 3.6. And, this has been one of the best indicators for me personally in my understanding of the risk and reward in the market. And the way I use it on the channel, as you guys already know, is that the moment this number dips below 3, for me, it's by default been a very good buying opportunity. I've been mostly deploying capital as soon as the MoneyVest index is below 3. The closer it is to 2, the better the opportunity in the market. So in other words, the more green it is, the better the risk reward in the market. And the higher it is, in other words, the more red it is, if it's at 4, 4.5, the worse the opportunity will be. So if you are in, let's say, greed or euphoria, then of course the risk reward is not that great, not as great as when it's in uncertainty, fear, or in straight up panic. So how does this relate to the level of cash that I have in the portfolio? So the first table is a liquidity table, which is essentially showing us the months of expenses that you need to have saved up in an emergency fund, right? This is going to be your emergency fund. This is how many months of expenses, monthly expenses, you have already saved up that you're not investing in the market. It's going to be liquid cash because if anything were to happen, at least you've got the money to go to essentially have for those emergencies. If your car breaks down, God forbid, if you lose your job, right? Medical expenses come up, anything that happens, you've got an emergency fund which you can essentially draw from to save, to essentially get by that emergency. So that is the months of expenses. Now, I like to be somewhere between sort of sufficient and secure. So that's going to be somewhere between 6 and 12 months worth of savings, monthly expenses saved up in liquid cash. You can be in robust, or you can also be in an excellent situation. Definitely not be in an emergency or minimum, because that way you have less than 1 month of savings. Limited is okay. Sufficient is good. Secure is perfect in my opinion. Robust is also very good. Excellent can be a little bit too much, but depends on person to person. Now that's the first table. You have to figure out where you're comfortable and how much money you want to have saved up in your emergency fund. In other words, how many months of expenses you want to save up. The next one is the liquidity level related to your portfolio, right? And this is where the MoneyVest index comes in, because if we are in a level which is at 3.6, right? We're in the optimistic zone. And to me, there's not a lot of opportunities. Maybe there's some opportunities, like for example, Advanced Micro Devices selling off today 10%, PayPal down, Enphase down, Google, Microsoft. There's a lot of companies that are still trading below their all-time highs, and way below their all-time highs, and trading at pretty reasonable levels. That represents a pretty decent opportunity dollar cost average into, and that's why we've got the shopping list to figure out what our buy targets are. But this MoneyVest index, it relates more to the overall market, and that's how I use it, because it essentially tells me when I need to be more defensive, when I need to be more prepared, when I need to be opportunistic, and when I need to be more cautious, vulnerable, and distressed. So in other words, if my liquidity level, in other words, the cash as a percentage of my entire portfolio, is in the 10 to 20% or 20 to 30%, that means I am playing it more defensive, and I'm very, very prepared for the next potential buying opportunity, because the markets are always going to give you opportunities. Always, 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 always. Always remember that no matter what, the markets will always give me the opportunity to buy. There's always going to be that next 10%, next 20% sell-off, next 30% crash. There's always going to happen. That's just how the markets work. And so knowing that, right, out of the two details, is it going to happen and when is it going to happen? We only have the answer to one. Is it going to happen? Yes. When is it going to happen? We don't know. But when we do know that it's going to happen, we can at least look at some measures and when we need to be a little bit more defensive, more prepared, versus when we can be low on the liquidity levels as the markets are, of course, selling off. So in other words, if markets are down 20, 30%, I would basically be down to 5 to 10% in cash exposure, because I would be buying a lot of stocks. But if the markets are near all-time highs and we're very expensive from a valuation standpoint, and a lot of individual stocks seem to be very extreme in their technical conditions being overbought, then I'd be more prepared and opportunistic, somewhere between 20 and 30%. So right now I'm a little bit over 20% in cash exposure on the back of, again, collecting premiums through options, putting in more money through my savings. And so I'm prepared for any type of market opportunity that may come my way. So this right here is a very important liquidity table that I wanted to address, that I think everyone needs to understand in order to move forward, and really just pick a number, see where you feel safe, see where you feel comfortable in your own investing journey. Now, when it comes to Meta, earnings $6.03 versus $5.25, beat on EPS, beat on revenue, coming in just over $40 billion here. And then if you take a look at Microsoft, earnings per share $3.30 versus $3.10 expected, and revenue $65.5 billion versus $64.5 billion expected. Supermicro also plunging over 33% as the auditor resigns after raising concerns months earlier. So EY has resigned Supermicro's auditor last week after raising significant concerns over the company's internal controls, board independence, and accounting practices. Supermicro was hit with a short seller report earlier this year and has delayed filing its financial statements for 2024 and is reportedly under federal investigation. So there's definitely been a lot going on at Supermicro Computers. So we're going to be doing some more analysis and research on this stock as well. But all in all, the markets were down. Google is still pushing up almost 3%. Visa was higher after the earnings. AbbVie was higher. I think they were also reporting their earnings. Eli Lilly was down over 6% after those numbers. And the entire chip sector, semiconductors, were down on the day. So coming over to volatility, still above 5%, so a little bit over 20 right now. So still pretty elevated as we are in the middle of this earnings season, and the very important elections and FOMC meeting is coming out next week. If you take a look at the 10-year treasuries, we are now sitting at 4.3%, so up another 1%. It's going to be increasingly more important for us to keep a close eye on where the 10-year treasuries go, because this is going to be a very, very important number for the markets moving forward. If you come over to the calendar, on the economic calendar side, we did have the GDP numbers come out today. So 2.8% was the actual number versus an estimated 3%. So a little bit softer than what the guidance or what the estimates were. And then tomorrow we've got the very important inflation numbers. That's your personal consumption expenditure and your core PCE numbers also coming out, 0.3%. So if I bring out everything here, low, medium, and high impact items, we've got personal income expected at 0.3%, year-over-year PCE at 2.1%, month-over-month at 0.2%, and then if you come all the way at the bottom, core PCE year-over-year, 2.6%, still above the Fed's preferred measure of inflation of 2%, and month-over-month sitting at 0.3% for core inflation as well. And we've also, of course, got the initial jobless claims of 230,000 expectations here. Coming over to the S&P 500 here. So this right here is going to be SPX on the daily time frame. Again, selling off a little bit over 30 basis points. For the most part, it's really been consolidating sideways for S&P. Resistance is going to stay put roughly at 5,800. Support level down to 5,766 for S&P 500. And NASDAQ here now starting to roll over just a little bit, still within the context of this rising wedge. So we still have this higher highs and higher lows. And if you do end up seeing a little bit of a breakdown, which would not surprise me one bit, support levels are going to be sitting roughly at 17,700. So those right there are going to be some levels to keep in mind. Very good buying opportunities for me personally in the markets moving forward. So that's going to be all for today. A little bit of a shorter live stream, but we are going to be listening into the Meta earnings call now. So thank you so much for joining. Make sure that you drop a like and subscribe to the channel. The bottom line is enjoy the market rallies as they continue to come in. I'm sitting on about just over 20% cash, getting ready for if there's any spike in volatility on the back of inflation data, elections, FOMC earnings, whatever the case might be, I will be ready to deploy. And for those reasons, in my opinion, I think it's really important to have access to the 30 stocks shopping list, as well as, of course, the MoneyVest Index, which can help you in your decision making. You can do more analysis using these tools as well. So link's going to be down below. We'd love to have you on board. 16% annual discount expires on October 31st. Link's going to be down below. As always, happy investing. I'll see you all in the next video.